Hey, folks, welcome back to the Land Fixer podcast. I'm your host, as usual, the best host in the world, Logan Swanson. With me today, we have Walter Johnson of Sonos Capital. How are you, brother?
I am well, and you are the best host in the world. So what is
Hey,
going on, man?
if I say it enough, it'll stick, right?
Right, right.
Folks, remember if you need any funding for your land subdivisions, entitlement projects, land flips, anything that doesn't go vertical, you can reach out to us at landpartnerfunding.com. You can email me at hello@landpartnerfunding.com. Or if you are a landowner and you're looking to make the best return on your land, partnering with a developer and entitlement guy like myself, I'd be happy to work with you. You can email me at thelandfixer@gmail.com. I look at these deals all the time and I'd love to find the best and highest use for your property. Walter, thank you so much for joining us. You have kind of a cool backstory. Retired at age 27. Can you tell us a little bit about what's bringing you back into the industry right now?
Yeah, well, that was short-lived, actually. Let's talk about a little bit of goal setting, right? So I set it a goal. I said I wanted to be worth a couple million bucks before 30. And I hit it at like 27, 28, right around there. It's like I hit my goal, and I think I was shooting too low.
Mm.
Right? And so kind of tell the audience is like just shoot high because if you hit it, and you're probably not going to be satisfied. So if you create this goal, this higher goal, then you'll keep shooting for it. So that's what I did. And then I got into, funny that you say it. So I got back into it. So I wanted to see how I can actually get into real estate. What was the best use? I was buying a lot of single family homes. I bought this land deal that I'll tell you about here shortly. But I bought this land, or I met someone. She was huge in self storages, and I said, "What's the best way to get in self storages?" And figured out, hey, what about if I just bought land and I just got it zoned, entitled, and actually sold it to developers or investors that actually wanted to um, invest in self storages. Never got that, but that's kind of how I started looking at land, and then kind of it went out to mobile home parks.
Okay, cool.
Mhm.
Tell me, I'm always kind of fascinated with folks that hit this point, right? I mean, one of the big questions that I always have for real estate investors is, all right, you set a goal. Your goal was 2 million. What did it feel like when you got there? Do you have a specific moment when you were like looking through whatever information adds up to your net value and then you were like, "Oh, what does that feel like?" And did you have a specific memory around that?
Yes, I didn't know. Well, I didn't know. I wasn't keeping track. I was actually buying an investment property in Austin, Texas. And how I knew is that I actually had to put in it's called like a 1008 and 1003, which is a loan application, residential loan application. And on there you list your assets and what you own and your 401ks and whatever you have. And it showed it. It was like 1.99 something something. It was like 2 million bucks. And it was like, oh, didn't feel like anything. But I just didn't know. I didn't know.
Yeah, right. I mean, I feel like wealth becomes intangible after a
Mhm.
certain point. So I kind of imagine, uh, one of the questions I ask a lot of folks on the podcast is what gives you motivation after you hit that point? Because I think, I came from a world of, a low income family, 7 kids in a mobile home in rural Wisconsin. The idea of having any level of wealth or business ownership seemed almost impossible, or that was for other people,
Mhm.
and when I got to the point where I started having success and freedom, I felt kind of a little loss in motivation for a while. I was like, well, I kind of have everything. And then you get acquainted with that feeling and you say, well, what am I really striving for now? And since you're coming back in, I wonder what is that motivation that's pushing you to whatever move forward in real estate right now.
Absolutely. So I believe you're just in leadership. I heard this before, that kind of stuck. It says you can lead with a carrot, you can lead with a stick. So it's a balance. So at times I lead myself with a carrot, and sometimes I lead myself with a stick. So what I mean by that is I actually let's say I started doing surf lessons in California. And then here in Arizona, you can go to the surf park and learn how to surf. Well, that's a carrot, right? So I'm like, okay, that's a motivation. If I do something and, push through, then I can have this carrot. But if the stick is, let's say I want to buy a new car, well, I won't buy it for another 6 months. So that's a, carrot and a stick. So that's actually what motivates me. But as far as money, or as far as I would say, having the money to put, buy the new iPhone or something like that, it's, it's irrelevant to me because, the last models is, I think, is the same as a current model, but it's just the kind of the goals that are personal, kind of, that lead me to the motivation.
Right. So effectively, you're motivated by experience. Like, all right, I
Hmm.
need to experience things and I
Hmm.
need this vessel, whatever it is, real estate or business in one form or fashion to gain those experiences. And, I feel that. I mean, I definitely, the older I get, the more I have this sort of wanderlust. Like, I just want to travel, man.
Hmm.
My one of my business partners is like notorious for just never being in the States. I always, if I call him, I'm like, "Where are you? Where are?" He's like, "Oh, I'm in
Right.
England. I'm in, whatever." He's never in the country. That's rare when he says, "Hey, I'm here." So I definitely admire those folks that are more focused on experience as opposed to just artificially stating some number that you're going to try to get to.
Mhm.
Because I don't think there's really much satisfaction in achieving those false goals of, all right, now I'm worth 10 million, now I'm worth 20 million, or whatever it might be. Because after a while, what is that really doing to serve you if you have access to the experiences? So, well, cool. You mentioned you have a interesting land deal. Obviously, we're a
Mhm.
land podcast, so I'd love to
Right.
hear
Yeah.
about that experience before we get into sort of the meat and potatoes of what you do.
Yeah. So the reason why when I was excited about being a guest on your podcast, one, you're actually, super cool, awesome. I follow what you do. But two is that I had a couple land deals. One is that I bought, I mean, it was, it was amazing. So I was a mortgage broker, and I had this client that says, "Hey, I know somebody that actually has some land that they actually want to sell." So I called them. They had a plot of land here in Southern Phoenix. I go to their house, and or right before they go to their house, I was asking them questions, and they're like, "Yeah, it's a piece of land." They gave me the address, and I didn't see it, right? But I was like, "Okay, we'll go by it." And I was like, "Okay, well, how much do you want for it?" She's like, "Can you give me 20 grand and pay the taxes?" Well, I know the area, so whatever it was, I was like, "Yes." Sorry, so I just go to her house. I was like, "I'll meet you at your house." And so we signed the purchase contract. We went through title, the title company. We closed. Everything was great. I think the taxes was probably like $600. I mean, it was, wasn't a lot. So call my property management company, and I was like, "Hey, uh, I have this land, and can you kind of just make sure that the future taxes are paid, etc." But it's free and clear. So the property was worth 80,000.
Mm.
So that was amazing. Well, wh- what I did was that I was like, okay, well, I'm going to borrow against it. So I borrowed, got a hard money loan on it for $40,000. And then I kid you not, I took that $40,000. I bought a place in Denver. I put a down payment on the place, or like my earnest money deposit on the place in Austin, Texas. And then I put money on a condo here in Scottsdale. And I just let it ride, right? And then a year later, I just paid it off. So that was 40 grand. So I made money off, I probably made $500,000 just off this $20,000 that I paid on this land, right? But I promise you, I kept this this piece of land. Now I go to the property, right? Because $20,000 you pay for, you're like, okay, I really don't care, right? At the time. And so I go and I was like, okay, well, I want to put a house on it. So um, I know you don't go vertical, so I definitely get that. This is the reason why I called, right? So I was like, all right. So I knew this contractor that did houses. I was like, hey, can you go to this piece of land? uh, pot it out, see what type of house I can, uh, put on it. So he goes there. He's like, there's a house on this. I was like, I have no idea. I've never seen this property. I just bought a sight unseen. Right. I was like, no way. So I call our property manager, like, hey, can you actually go by, have somebody go by and see if somebody actually lives in this house? And somebody actually lived in this house. I had no idea. So I was like, okay, well, you guys gotta like send him a notice. You guys gotta see if he actually wants to sign a lease. Um, so they did all that, right? No response, no response. So what you do at that point, you start the eviction process.
Right.
And so we do the eviction process. I hire an attorney and I have to go to court. Of course, the guy got served, have to go to court. Well, he um he was an old tenant that just stopped paying. And
Mm.
the previous owners that I bought it from just didn't want to deal with him anymore, so they just let him stay. And he still had utilities in his name, but he didn't pay rent. So we go to the court, and his attorneys asked me like, "Hey, do you have keys to the property?" I was like, "No." I was like, "No, I don't." "Have you been to the property?" "No." "Have you been inside the property?" "No." "How do you own it?" I was like, "Well, I bought it, and we went through a title company, and this is the check that I paid for it. This is the title insurance that I have." So they get the guy on the stand, and they're saying, "Hey, so whatever his name was, sir, can you read this Exhibit A?" And he says, "No, I just can't." And the judge is like, "Wait, what?" So the judge is like, "Okay, well, you read this exhibit." He's like, "I can't." So the judge is like, "What's going on here?" He's like, "I can't read." And so I'm like, he tried,
Oh man.
like, yeah, he tried to fight this deal and he couldn't read anything. So anyway, I bought it, legit, honest, and I got the property. And then so I made that money, about $500,000, and then I sold it for, I think a year later, for about 40 grand. Pretty good on the land deal.
Not bad in a secret house.
Right. Right. So,
Yeah, we had a similar situation
right.
actually out in Kentucky. We bought I think it was three parcels all together, and
Mm,
there was a house right on the boundary line of the
yeah.
one of the parcels, and we just thought it was a GIS issue, like the map was showing it on the property, and it really wasn't. And the further we went down, we realized like, oh, there is a house on this property, and
Oh,
there's like a angry squatter that lives there with dogs and stuff, and this is out in like the boonies in Kentucky. So it's like nobody wanted to go out there and approach the guy. Man, it was a mess.
right.
So we've been down that route before. But that's awesome, man. It kind of shows you a little bit how if you're able to make even a small purchase
Hmm.
on a real asset, it can add up.
Hmm.
Especially if you're smart with leverage and things like that. I mean, a lot of folks, myself included, honestly, I'm not really great about leverage. We've had a land portfolio that's worth millions, and we never borrow against it. And I guess we could, but in our model, we just don't really see the necessity, and we're not trying to leverage it to go build homes or something like that. But maybe that's something we should look into down the road a little bit. But let's get into what you're doing now. So you're in the mobile home park industry, correct?
Hmm.
Or
Hmm.
I'll let you. How about you just tell us what you're doing right now?
Yeah, so land is really it's really lucrative. I know a lot of people that actually make really do really well in land. I actually know someone that it was actually during a little bit before COVID. He bought 880 acres for he was into it for about 5 million. He bought it and he did
Hmm.
about 1 million in entitlement zoning, etc. And then he sold it to a huge developer named national developer 18 months later for 46 million, excuse me.
That's a lick.
Yeah, yeah. So he did that well. So I was like, okay, so I understand land, right?
Yeah.
But, but I like cash flow. So that's the difference. That's why I'm in mobile home parks. Uh, yeah, I realized with parks, I bought single family homes and I was like, why am I buying this? Right? I think the new buzzword is tenant and toilets, but I went through that and I just don't want to go through this, right? But you still want to make some money. I think single family homes is the lowest barrier of interest and the easiest, I guess, to learn, to educate yourself on. When you're dealing with mobile home parks, a commercial, now you're dealing with cap rates, vacancy rates, you know, park on homes, sit it on homes. However, there's still money to be made, and so I learned that probably about 10 years ago, and I like it. I enjoy it.
The mobile homes are much more like a mobile home park is much more like a business, right,
Hmm.
than real estate. So it's kind of where those two things blend
Hmm.
more outright in terms of the individual product in the residential side. I'm curious when you're looking to acquire a mobile home park, are you building or are you buying directly from like
Just
the mom and
buying.
pop sort
Yeah,
of?
buying. Yeah, absolutely. And nothing against your industry or your segment in real estate, but it's really difficult to actually build a mobile home
Oh
park.
yeah, it's terrible. I have
Yeah.
people ask me all the time, like, "Do you have land for a mobile home park?" I was like, "I don't think anybody does." I mean, good
No,
luck.
no, no. I would say the best thing to do if somebody actually wanted to buy, in my opinion, is that they buy land, they get it zoned and titled into different parcels, and you actually, oh, so somebody's actually doing this. This is actually great. This is, I wouldn't say it's a hack, but I know a few people that's doing this in Arizona. So they'll buy, let's just say 2 acres, and they'll split them
Uh-huh.
up 1 acre, but they'll buy the 2 acres, let's say for $120,000. And then they'll put two manufactured homes. So they'll split it up into an acre each, put two manufactured homes on each, or one on each plot of land, and then sell the actual homes for 300 grand each. So they do well. So they do about, 10, 12 deals a year and just make $1 million a year.
Yeah, my buddy Brandon Richards does that. He's awesome. Yeah.
Yeah.
Um, but you want it to last forever, right? I mean, that's kind of like
Mhm.
the biggest issue with land. There are only a few somewhat difficult plays where you can create sort of perpetual money from land.
Mhm.
And that's usually commercial land leases. You
Mhm.
know, if you buy a property right at the correct intersection between, say,
Mhm.
a freeway or whatever, and then you create a few little pad sites on it and you do land leases to like McDonald's and shit like that, you can make some good money.
Mhm.
That sort of runs in perpetuity. But that is the big weakness of what we do is at the end of the day, you're just transacting. And as soon as
Right.
you sell something, you better have the next thing to sell lined up
Mhm.
or your cash flow is going to stop. So when you're underwriting, or actually, let's go way back. All right, you're doing market research, right?
Mhm.
You know, you're getting ready. You're going to go try to find your next takedown. What are you looking for in a market, or are you operating nationally? How are you pinning down what segment you want to target?
Yeah. So we look at landlord friendly states. I
Hmm.
think that's just the way to go, whether it's single family homes or apartment buildings or mobile home parks. That's one. Or even in your industry as well. So if somebody actually
Yeah.
wants to, build a house, a stick build on a piece of land, that actually helps her, build a few houses and rent them out and sell 6 houses. But that's what we look at. We actually look at how we can actually raise rents at 10 to 20% within the next 2 or 3 years. That actually matters, and vacancy rate. So we see, I come across deals like you do, and people have 20, 30% vacancies, or excuse me, not occupied. It's like that's a lot of heavy lifting. How about you just spend some more time and find something that has 70% or 80% or 100% occupancy? That'll save some time and stress.
Okay, so I've talked to a few folks before, and usually they're looking for something that's underoccupied so that they
Mhm.
can buy it at a discount and
Mhm.
then go in and bring usually do a little bit of renovation or whatever and then
Mhm.
occupy the space fully. So you prefer to buy the fully occupied.
Phil, I would say about 60, 70% occupied.
Oh, okay, okay.
Yeah, those 20 and 30% vacancies, or 20% 30% occupied. That's really tough. It takes a while because it's
Yeah,
the
so
reason why it's actually has that occupancy.
right. And I
Mhm.
imagine, a lot of these mobile home parks were created, what, in like the 70s and 80s and stuff like that that you're
Mhm.
buying. So are you dealing with a lot of aged and failing infrastructure when you buy a park? Is there a lot of due diligence that goes into like the water lines and septic
Mhm.
systems or whatever else?
Yeah, we usually stay away from septic systems.
Okay.
Those actually could fail. We stay away from, treatment plants. I would really shy away from that. You see people that are saying, "Hey, this is actually I can get like 25% return on this park," but as a treatment plant, that treatment plant can run you, $1 million, $500,000. So there goes your profit. So we usually try to go with public utilities.
Okay. I mean, that makes sense, right? You don't want to do the heavy lifting on all that sort of stuff.
Oh yeah, no.
So you're going to take it down. Are you typically doing any sort of improvements to the property after you purchase it, or are you trying to run it as is and just fill it up?
Both. Yeah, so both. We actually have one that we're gonna just put 7 houses on them and just run it as is. Sometimes you don't need to. Sometimes it's really cool and the park is big enough for you to kind of put some amenities on there. But usually we kind of look at it and saying, hey, can we put a dog park here? Can we put some street lights that are, solar street lights to make it actually look, more appealing and safe. But we do try to spruce it up a little bit, but for the most part, we're not trying to build a rec room or a basketball court.
Sure. Is there a Goldilocks sort of size for a park that you're looking for? I mean, I've seen things as small
Mhm.
as like 8 or 10 mobile homes. I don't even know if that qualifies as a park. And then you have other ones that are more expansive into the, I don't know, like hundreds. I don't know how many you can really fit into a
Yeah, yeah,
park.
thousands actually.
Really?
Yeah, I would say I would stay away from like the tens and eights that you're talking about. There's no scalability. Plus, if you actually want to have a manager, you have to give your manager, you know, some, compensate them, and it's tough doing that
Yeah.
with such a, low space count. So usually, I mean, we bought, I would say anywhere but like 30 to 50 is a minimum. I mean, we bought some that are like 27. We
Hmm.
did that, but we bought it for half off. And
Right.
so that was a equity play.
And are you trying to stay in these forever, or is there like I know a lot of folks will just try to
Mhm.
do the seasoning process or something like that, where maybe they
Mhm.
do some minor improvements and then they try to get the vacancy rate down as low as possible, and then they bring it back to market,
Mhm.
or are you just like I want these puppies all day, you know?
Yeah, I would say I thought about that. I was like, hey, this is actually a great idea. Somebody just goes out there and they buys 5 parks, right? And they just keep them for a couple years, and you just, put them back on the market for $500,000 or $1 million more for each park that you purchase it from. That is probably a business model. I mean, that's a lot of money, but I'm just in it for a long run. I mean, I'm thinking about, how is my life going to be in 8 years from now? How's the economy? How's the inflation? What is the dollar going to be worth? How's gas prices? And so I want to structure my life and my family and my I guess the travels and like my hobbies based on where I see the world in 6, 7, 8 years.
Right. So you're thinking it's safer to just to hold these things, right?
Yeah,
I mean,
yeah, absolutely.
you get the benefit of cash flow and appreciation, and I think that's
Hmm.
really what separates mobile homes right now from single family. Is it seems like single family is getting to the point where it's just not really profitable month to month
Hmm.
for a lot of people. So you're really banking only on appreciation, and
Hmm.
even that's looking kind of dodgy. So,
Yeah,
um,
yeah.
well, let's get into syndication a little bit.
Hmm.
I'm sort of endlessly fascinated with folks that are willing and able, like myself, to play with other people's money.
Hmm.
I've never gone down the syndication route. I usually just have like a couple partners that I go back to. But what's syndication like? You know, when did you take that leap, and how do you kind of structure it with the people that are contributing to your fund?
Sure, sure, sure. So I took the lead. I took that lead probably about 6 years ago. I didn't know anything about it. Uh, actually the investor that I told you that sold the land for about 46 million. I said, hey, I sold this park and I want to get in more parks. I like my returns. I like, um, how they run. What should I do? And he says, create a fund. I was like, I never heard about that. He's like, well, that's what we do. And he told me a little bit about it. So I spent probably about a year. Actually, I spent about 3 months researching and about 7 months figuring out who you're going to use and the corporate attorneys, et cetera. And so it took me about a year, but I understand from my perspective, it's really safer. You spell out how the fund's actually going to run, and that actually helps. And I think it gives a little bit of credibility as well, especially with mobile home parks, right? I guess with land or
Hmm.
apartments or houses, people are like, oh yeah, I heard about that. Mobile home parks. I think a lot of investors are like, how does this work? And so you're able to explain that how they work in a fund, which is pretty cool. And then it's relatively simple. It's nothing too ordinary. I think most of our investors, like we give them quarterly updates and quarterly returns, and we hear from probably a dozen per year. So it's not that stressful like I thought it was going to be
Yeah.
in my head, right? I think I would put it this way. Having single family homes as rentals is more stressful than having 113 investors.
Okay, so well, that's good. Some real numbers. So 113 investors. Is there like a barrier, like a lower end threshold for what they can commit, and what sort of returns are your syndication partners receiving?
Sure, sure, sure. So we used to have funds to where it was $50,000 minimum. Now it's $100,000 because $50,000. You just don't want that person saying, "Here's my last $50,000." So we kind of raised our criteria. But they get 10% preferred on this fund. We're going to revise that on next fund. That next fund is going to be 50 million, and they get some of the cash flow in the parks.
Okay, so what does preferred returns mean? Get real
Sure, sure,
basic with
sure,
my audience. A
sure,
lot of them
absolutely.
have not explored this.
Yeah, so preferred return, they actually get their return first. So they get their preferred return first, then they get uh, the cash flow from the park, and then the sponsor, which is, let's say me, we get our cut. We split that 50-50.
Okay, so they
So,
get so say they put in $100,000. Does that mean they're
mhm.
getting 10% annually from that
Yeah, yeah,
100,000? So they're
yeah.
going to get $10,000 a year plus 50% of the profit from the facilities.
Correct. Yep.
Oh, that's a good deal.
Mhm.
So does that feel daunting? I mean, so say you have 100 or so people
Mhm.
holding their money. Do you ever struggle to deploy that money? Because I've gotten to a point at times where I'm like, I don't know, how are we going to get this money out and use it
Mhm.
effectively, especially since the real estate market likes to do this,
Right, right.
How do you sort of carefully manage that?
Yeah, so at times, I mean, you'll have delays. You'll run into parks that you want to buy and just doesn't work out, falls out of escrow. You find something to due diligence to where you're like, yep, we're not buying this. But we have a marketing team and we have acquisitions, so we're always looking at properties and we're always raising capital. So it's this dance that we actually play. It's a balance, but I believe that's the best way, in my professional opinion, is because we're always actually looking for a deal and we're always raising capital. So it lets our we let our investors know we're always actually looking for an opportunity to place your capital.
Okay. So you mentioned your next fund is, what'd you say, 50 million or 500
50
million?
million. Yeah, 50 million.
Okay. So is that going to be separate from this fund or does
Mhm.
your Okay, so how does that work then? You're going to go through the whole process again, create another
Yeah,
fund,
yeah.
and is it just to raise the threshold or is it a different structure or maybe different things that you're pursuing,
Yeah,
different properties?
yeah, so it's a different structure. This one's 70-30, a lower preferred return. However, this one's actually we're gonna call it Forever Fund. So we're gonna like we were just talking about a minute ago, we're actually just gonna keep the properties forever. No, we may sell some to, just because we may have it the opportunity may be right, but for the most part, we'll just keep them. So we'll refinance in year 3 or 4, refinance in year 6 or 7, keep refinancing, but I just keep them.
So lower preferred return but a higher profit share is so the 70% to them or 70%
Yeah.
to you?
Yeah, 70% for them and then to our investors, and then we keep the properties for longer term.
Okay, that's interesting. And how
Mhm.
about the disclosure process? I'm assuming so you give them a quarterly report and that's just what, a P&L of every property as well as a breakdown of what their share is?
Yeah, so we have like a waterfall, or we have, software that actually calculates the cash flow and the updates.
Okay, so you don't really have to spend much time doing much of that.
No, no, no. So we have software that actually does the software for the property management's income and expenses, and we have the same, I would say, software that does the calculation of the distribution.
Okay, so what's the majority of your time doing these days then? Is it
Finding deals,
just,
talking to owners, yeah,
yeah, you're on
managing.
the phones, huh?
Yeah, absolutely. We actually got I turned my phone off, but we actually got a deal in South Carolina we're looking at. We have a deal in Ohio we're looking at. We have a deal in Arizona we're looking at. So we're always looking at deals. So I think that's the main, the due diligence is actually the time consuming thing.
Smart. Okay, cool.
Mhm.
So, do you feel like the industry you're in is saturated at this point? I mean, it seems like every industry you talk to somebody,
Mhm.
even in
Yeah,
land, you talk to,
yeah.
there's no way to really get in. Everybody's getting called all the time or whatever. Is it the same in mobile home parks?
Yeah, I think that, but I heard something. I was actually having lunch with a good friend of mine. He says if it's saturated, that means there's money into it. If it wasn't saturated, you would actually have, probably an issue, and there wouldn't be a lot of money into it. So eventually, your competition, I would say, they're going to fall off. They're going to find something else. They're going to just say, this is not for me. They're going to go for maybe the next shiny new object. So I would say just keep going.
Yeah, I agree. And do you kind of feel like also the higher price point you go, the lower the competition, right? So like
Mhm.
you're fighting in the trenches when you're trying to
Mhm.
find those $20,000 land deals. I mean,
Oh, absolutely.
everybody's trying to get them. But when you start talking about like million or multi-million dollar land deals,
Mhm.
that's when you can just find them on MLS. They're just sitting around because there's just not as many people that have the combination of vision and capital to take
Mhm.
those things down and risk tolerance, right?
Right.
So is that sort of a contributing factor in elevating your fund amount to
Oh
chase
yeah,
those bigger
absolutely.
deals?
Absolutely. Absolutely. So that actually helps. So we're looking at we looked at one for we're looking at one for 7 million, for 15 million, for 12 million. So
Interesting.
so they talk to people, but it's not as much as you think. So let's just say if we found one for $800,000, you would actually probably have about 20 buyers. But 15 million, you probably have about three to
Three,
four.
four, right? Yeah. So
Yeah,
it's like the
yeah, absolutely.
competition dwindles
Mhm.
just as the zeros are added.
Absolutely.
So that
Absolutely.
makes sense, right? So if you raise, 50 million in capital, you could buy three parks and spend that money or something. I mean, that could be
Exactly.
the
Absolutely.
life of that fund.
Yep.
And then you just go raise 100, right? Or is that the
Yeah, and
goal?
just
Just
keep
like, all
doing
right,
it. Just keep.
step, step, step,
Yep.
step until it's
Mhm.
just you and some other guy from New York arguing over a property.
Some random, yeah, exactly. Some random guy. Now you guys are friends, and now you guys like look for each other's deals. If you don't want that one, you kind of call him. So yeah, that's usually how it works.
Sweet. Well, we're
Yeah.
kind of getting to our cutoff point here. What are you mainly looking for from my audience? Are you looking maybe some folks who might be interested in contributing to your fund?
Sure, sure, absolutely,
Okay,
absolutely,
how
yeah.
can they do that?
Yeah, reach out. They can call me at 480-674-2035. I think that would be the best way because that way I can talk to them and actually just see what they're looking for. Some people love land because they actually want to make that quick pop, which is nothing wrong with that. And some people are just like, you know what? I want cash flow. I just want to bank some money. I want to pay off some debt. I want to just, save money for, the future. And it just happens that way.
Okay, and is there going to be a minimum contribution? So are you raising for the next fund, that $50 million fund right now?
Yes, yeah, we actually will be. Yeah, it'll be released next month.
Okay, and what's the minimum commitment on that?
That one would be 50,000.
Okay, sweet,
Yeah,
sweet.
yeah, because we're gonna pull a lot of people in that one. It's gonna be tier, so you have 50,000, you don't get as not much for return, but it's a tier.
Interesting. Well, cool, man. I really appreciate it. I know you're a busy guy. Thank you so much for being here. Um, is there anything else you wanted to plug before we sign off? Any socials or anything like that?
No, I just wanted to, just have this great session with you. It's been good. I learned a lot. So I appreciate it. It's a great
Cool.
morning to be with you.
Cool. Yeah. Thanks for getting on the hot seat with us.
Yeah.
Folks, as usual, remember, go to landpartnerfunding.com. Just spend 20 minutes on there. There's really nothing to look at, but just do that for me. Bring me some land deals. If you like the podcast, like, share, all that sort of stuff. And folks, we will see you on the next one. Walter, thank you so much for your time.
Likewise. Thank you.
Cheers.